Welcome back to Mortgage Giants. I'm tall, he's taller. Let's talk mortgages. We're back, baby.
2024.
2024. All right, we are going to start with some attempted predictions.
We're gonna make predictions. So we'll succeed in that, but how successful or accurate we are, that will be an attempt.
Yeah.
That's
We do have, like, in the episode at the end of the year, we got to check these and just see how close or how far off we really were.
yeah, it's tough. Like, for the amount of seminars, I get to go to in a year, and the economists that I get to hear present, like, they all got the same joke.
Yeah.
And there's only two types of economists: wrong or lucky.
Right. Exactly.
Like, and that's their full-time job. I mean, this is like I've had sat with the city of Edmonton's economists provincially, and then national banks. Like, I've got to hear all the big boys lay out their forecasts, and it's all the same. It's like it's a hard game.
Yeah.
And but we'll do our best.
Yeah. Because I mean, like, sometimes they go against what the logical decision would be.
For sure. And there's just so many external factors. If anything, we take away from the last couple of years is that we just don't know.
Mm-hmm.
There's so many things, and like, if you're a person that doesn't like feeling vulnerable and you're that like type A control freak, I bet you the last couple of years have really shaken your self
core.
Yeah, like, I mean, COVID, vulnerable.
Yeah.
Ukraine, vulnerable. There's the war right now, obviously in Israel, and those are extenuating circumstances, external, that we
Rates up, prices up,
gas,
groceries
oil. Who wants to produce oil?
Yeah.
It's hard, but we can do our best. Well, again, this is more of an editorial because I am not digging into. This is my opinion.
Mm-hmm.
These are our opinions.
Yes.
Based on all of the information that we're gathering from other economists. But as far as doing our own research,
or just a hunch.
Yeah, that's right. So, let's dig into a couple.
Okay, let's start with how many changes to the overnight lending rate do you think Bank of Canada is going to do? If you think they're going to do decreases, increases,
right?
How many changes do you think they're going to do?
Okay.
So we got to go in blind, and then
2024.
In 2024.
Just in 2024.
Just in 2024.
Okay.
So we're just doing number of changes.
And then bonus question: when does the first one happen?
Okay. All right. Ready?
Okay, yeah.
4? Okay. Both said 4.
Okay.
I said in March.
And I said June.
June. Okay, so I'm one early.
Yeah. So just quick note on that: the Bank of Canada has 8 scheduled meetings throughout the year.
Yeah.
That is, you can follow that calendar. It's already published. So 4.
Yeah.
I think that brings us down 1 full % on the variable
Yeah,
rate.
like that's what I would say, like a quarter point each.
Yeah.
4 quarter point.
Yeah. So that's okay. 1%. That and the data that I was reading based on was, I mean, out of the big 6 banks, the most let's say recognizable brick and mortars, that was on the conservative side.
Okay.
All of them had 1%.
Mm-hmm.
With about, out of the 6, 3 had 1.5%.
Okay.
Nice. Down, so that'd be 6 decreases.
Yeah.
So based on that, I would say I'm on the conservative side.
Okay.
Which is rare for me. Yeah. I am a perpetual optimist, and but yeah, I just think the reason I say 4 is that I think that it might start a little bit later.
Right.
So that might just run us out of calendar year.
Right.
That's all.
Makes sense.
Yeah.
So I'm worried because, like, when they increased it, it's too reactionary and they don't give it time. My hope is that they do it one, give it time, do one, give it. They probably won't, but
it's the rates, the drops will happen. I think hopefully back to back to back. Unfortunately, I wish there was more time, because I don't want massive inflation to rear its head. I don't want home prices to rise that quickly. I am in favor of a stable, measured increase, and obviously we're located in Alberta. I don't think that our house prices, I think that's another question later on. We'll get to that, but I don't think a massive frenzy and turning taps on and off, hot cold is helpful. So I'm hoping it's a conservative, measured approach, and the economy is supportive of that, and nobody loses their damn minds.
Exactly. It can't be too reactionary.
Yeah.
Okay, so right now our best rate is 5.09 for a 5-year fix.
Okay.
Where do you think we will finish the year? At the end of December, what do you think the best 5-year fix is going to be?
Okay.
We're
talking high ratio mortgages.
Insured.
Okay.
So currently 5.09. What do we think the best is going to be at the end of the year?
Okay.
Ready?
Yeah.
I'm going 3.99.
Oh!
I'm shooting for the moon.
Yeah, I'm saying 4.69.
Okay.
Yeah.
Half a point.
Yeah. Okay, why don't you tell me why?
Well, so my theory is that they to keep up with everything else, they're going to have to drop fixed rates this much.
Yeah.
And I've heard some people say that it's like the low 4s is possible.
Yeah.
So then I'm gonna shoot let's just get into the 3s. A lender's gonna have a promo.
Yeah.
Dip right into the 3s right at the end of the year. That's
fine. I'm saying 4.69 because at that number, I think affordability becomes, and I think a lot of applications become more approvable at 4.69, just based on our home prices and down payment and average incomes around here.
Yeah.
I think that opens up a lot of purchasing power for people here in this market. And if we're saying that the variable rate today is going to go from 6.2, 6.3 to 5.2, that still opens up the door for the Bank of Canada to drop it a couple more times.
Right.
And then for the first time in over a year, the variable should be below the fixed.
Right.
But I do think that the fixed is still going to remain the lower rate for the better part of 2024.
Another reason I think they're going to drop it more is because they've already done the insured qualification change, right? Where on a renewal, we don't have to qualify you off of the plus 2%, just contract rate.
Yeah.
And I feel like there's probably going to be more push for more of those type of changes, where less qualifying intensity. Whereas if they just dropped the rates altogether, it would just be easier to qualify versus okay, let's put a new policy in for this type of thing or a new policy in for that.
Just let the rates do the work.
Keep
policy out of the conversation.
Yeah.
I would like to see that obviously come lower. I think that that's again my conservative guess. I would like to see 4.34.
Yeah.
But I still think it's going to be a 4. I think that it's still going to be a bit of time before we see rates start with the 3 again.
3.99.
Yeah. Yeah. So okay.
Well, we'll see.
Yeah.
Okay. And then home prices. Now, I'm not sure how we want to try and guess this, because there's percentage of how much it changes. I don't know what should we try and guess it.
And we're talking. Let's talk about our region.
Yes.
Yeah. Okay. So Alberta, maybe northern and central.
Yeah.
Central northern Alberta.
Yeah.
Because Calgary has kind of isolated itself now. It's kind of become one of the heavy hitters in Canada with the market.
Yeah. Well, I saw an article saying that Calgary is going to outpace Toronto and Vancouver with how much they increase compared to how much
Mm-hmm.
Toronto and Vancouver.
Yeah, I mean,
do.
Toronto had the worst year prior to the global financial crisis. There's something
Yeah.
like 66,000 less homes were sold.
Yeah,
So like that's a massive number.
yeah,
That's an entire city, like an
Mhm.
entire city. Like, you know, some municipalities around here, like how big's Red Deer? How big's like you could combine Sherwood Park and Beaumont,
yeah,
and that's how many less houses were sold. Like,
Yeah.
holy,
yeah.
you know, that's a serious drop for sure. But Alberta, let's say north of Calgary, I mean, okay, so let's talk about house prices and
Okay.
let's go up by a percentage
Yeah, let's go up by a percentage.
or down by a percentage. I don't know. What you think.
Yeah, right. If we were talking about rates going up, then we could talk about prices going down. Okay.
Single family detached houses.
Yeah.
Yeah. The condo, my downtown condo is still going to cause me pain.
Yeah, there's going to be no change.
No change is good. I would take that. Okay, I'm up 6%.
Okay.
Yeah, you're up
3.8.
Yeah. So up is definitely going to be, like you
Yeah.
said, we don't need any policy. We don't need anything to make those increases happen. Just sheerly rate.
Yeah.
If rates come down, demand
Yeah.
will be there. There were a lot of people. Like I don't know where you finished your year with number of canceled pre-approvals,
Mhm.
where you had that conversation where
Yeah.
people were just like, you know what,
I'm just going to hold off.
we're just gonna hold off at 2024.
Yeah.
Like lots, like there's lots of that going around, and with a little bit of stability and decrease, it's gonna bring those buyers back.
Yeah.
And inventories are low
Yeah.
still, and so that will naturally drive up
Yeah.
prices.
Yeah.
So
But I mean, like this, we've talked about this before, but this goes to why you shouldn't try and time the market.
right,
Because people who are like, I'm going to wait for a better rate. Okay, well then once you get better rate, now prices are going to go up. There's going to be more competition. Oh, home prices are too high. Like there's,
right,
you can't win one way or the other. Like provided you can get approved for what you need for you and your family,
Yeah.
buy the home
Yeah.
versus trying to get the best price or the best rate.
yeah, absolutely. I mean, and you see, like you'll see a lot of the realtor market, and they're all out there like really hammering the don't miss out. Like if you don't buy now, you will pay more. Like it's that fear tactic. Like let's focus more on the education piece of
Yeah.
that and say, okay, well, what are we willing to risk if we think that buying now makes sense for our family? We have a need now. Explore the variable rate option, and let's talk
Yeah.
about where we think the rate will be, because like 6.2 turns into 5.2 turns into 4.7 could happen within the next, like what we said.
Yeah.
This should be it could be a 16 month horizon for you to get into a mid 4% range
Yeah.
if you want a variable rate today.
Yeah.
So there's ways around it. We have shorter terms.
Yeah.
So yeah,
There's a strategy.
it's strategy.
Like,
Yeah.
it's not, yeah.
Yeah, for sure.
Okay. Now, what do we think Calgary is going to do if we're just talking Calgary?
Oh yeah, like I mean, I think the Calgary. I think there's still room there for that market to go up.
Mhm.
Just with again migration into Alberta, I think
Yeah.
people are still really keen on Alberta,
Yeah.
and everything flows through Calgary.
Yeah.
So I still think that's the gateway,
Yeah.
and they'll see prices and demand go up there until a lot of families are getting priced out,
Yeah.
and then they'll make their way through, to the other northern
Yeah.
parts. But yeah, I still think there's room. Like I don't think that they're in that bubble. Like I don't think people are gonna see any type of decreases that they should be holding out for. Unfortunately, I think it's a great city.
Yeah.
And if I'm gonna move out from an Ontario or somewhere like that, I'm gonna move to Alberta. I want to be close to the mountains. Like there's
Yeah.
just a lot of things that make sense.
Yeah.
For
Like-
Calgary to continue to grow.
Like I want to say 6 years ago, we thought about moving and we seriously considered Calgary because of what you can do from
Yeah.
Calgary.
Yeah, for sure. It's definitely a great city, and I think the pricing people in Canada are finally, recognizing some of the benefits of being out
Yeah.
west. Yeah, for sure.
Okay, let's talk average debt,
Mm-hmm.
consumer debt, not mortgage, not HELOC, consumer credit cards, lines, credit card loans. Now, it was tough to get an exact number online because so many places pull information. Now, from what I saw, there was a couple things to note for average. I had one place say that the average consumer debt for everybody averaged out to about 22,000 for everybody. And then I had
Okay.
some places say that the average person carries about $4,000 per credit card. And then some broke it down by like age group. 35 to 44 was carrying 47, which seemed very high. I don't know who's right in all of this situation.
Yeah.
And the StatsCan information that I saw was from 2021.
Mm-hmm.
So it's like, it's tough.
Yeah. So I mean, to me, okay, let's go back to 2021. Like borrowing was cheap,
Mhm.
right? Like that was when interest rates were extremely low, so debt would have gone up.
Yeah.
Like that's again the mechanism that the Bank of Canada can use to control household debt, and it's something that's super important.
Yeah.
What also needs to be factored in is, okay, we can all carry debt, but do we have anything left in the gas tank, in the form of savings
Mhm.
to cover that debt?
Right.
I think coming out of the last year, the amount of household savings has really depleted.
Yeah.
With the slower economy, the cost of inflation, people were using their savings to maintain their lifestyle.
Yeah.
So I think the reports there are now saying, the amount that banks are holding in savings, people are holding in savings is way down.
Yeah.
Which is never good, and it's something that I think the government and the banks need to really keep a close eye on.
Yeah.
Because when people run out of money, they have to turn to more debt.
Mm-hmm.
So people are. It's I kind of said the same thing in reverse too. But so people, I think ultimately love debt, have a love for it because when money's cheap, we'll borrow it,
Mm-hmm.
and when it's expensive, we rely on it
Right.
because we run out of savings, but we want to maintain lifestyle.
Yeah.
So that's tough. It's tricky. But so we're going to talk about whether we think it's up or down.
Yeah, I'd say so.
And it's going to continue to go up or down.
Yeah.
Yeah. I think that buying is slowed. Like I think people are slowing down on maybe those household appliances, the extra trips, things like that.
Mhm.
So I would be optimistic that household debt should reduce this year.
Oh, really?
Yeah.
I was going to say that it's going to go up. I don't know about you, but I feel like I've seen more and more people with car loans on their application.
Mm-hmm.
And some of them are newer because they had to, because they didn't have the savings, previous vehicle broke down,
And they're forced into debt.
they're forced in to have to get this. Now, lots of these people are not the ones that are buying the $90,000 truck they don't need. Right?
Yeah.
Like it's a 2014 Kia Sorento or whatever.
Sure.
Like
Okay.
just something that is needed. But I think that is what is going to raise things.
Yeah. Which, okay, so let's say if the household debt remains neutral or does go up, there are 40% of all mortgages in Canada are going to come up for renewal in 2024.
Mm-hmm.
And then another 40% in 2025. So basically, by the end of next year, every mortgage will have turned over in Canada since COVID.
Yeah.
Okay, that's crazy to think about. Now, if our markets here have appreciated in value, homes have gone up slightly. If you're up for renewal and you are carrying that COVID debt or that new card debt, there were some changes to policy that are actually going to make it easier for us to extend amortizations
Yeah.
and try and help cover some of those higher mortgage costs.
Yeah.
Because pretty much anybody that's going to be renewing from a fixed rate into another fixed rate over the next 12 months will see a higher payment.
Yeah.
So yeah, there's going to be a real need for mortgage brokers and the banks to have those conversations on saying we got to look at the whole picture
Mm-hmm.
holistically, all debt, consumer debt, and your mortgage debt. And if there is room in your mortgage, it's definitely a strong consideration to roll in that consumer debt into your mortgage.
Yeah.
You know, that's going to alleviate a lot of the pain.
Yeah. I got on this topic, I got into, which you should never do, but I argued with a guy on the internet about a post that I did on TikTok.
Oof.
Tried to roll in the debt into the mortgage. And he's like, you should never do that.
Right.
And it's like, yeah, okay, now you're paying off the debt over a longer period, but you are not looking at the factor of this person is essentially drowning in debt. This is not manageable in the current state of car and line of credit, loan, credit card, whatever.
Yeah.
So to have it in a mortgage makes way more sense.
Yeah. Those internet conversations are, I know, whenever I start, you know, I go quiet at night, you know, and I'm on the phone, my wife's like, what are you doing?
Who are you arguing with?
Who are you arguing with? And I did get into a slight one with a private second mortgage company.
Oh.
And their ad was very simple. It's like, don't refinance your house, get a private equity loan, and don't break your rate. And yeah, that's fine, but what if that person has a variable rate mortgage and it's gone up 5%? That is a conversation to have.
Yeah.
What if they have $80,000 of credit card debt that they cannot get rid of at 21% interest? It is not about rate at that point. It is about surviving.
Yeah.
And so there's so many messages that can come across.
Yeah.
And it's online, so you only have so many characters to
Yeah,
deliver
I know.
a point, and it's all it's a warfare, it's battlegrounds.
Yeah.
For sure. So just every case is different, and do not beat yourself up if you have to do a refinance.
Yeah.
To make things work for your family. In a perfect world, you can wait until your renewal date. That is the best time to give a total overview and look at what we can do. But yeah, like people that have taken the variable rate up, you know, are hesitant to stick with it at renewal right now. People that are renewing right now, they've gone through it. They really have gone through it, and they're tempted to take a fixed. And some people need to do that for their mental health.
Yeah.
I don't care if you tell me rates are coming down. Put it in an email and we'll revisit this, and I will not hold this against you in a year.
Yeah.
But they're just over it. They just can't handle, you know, the ride down. They don't want the risk, so they're going to take a fixed rate. But I would encourage people to really give a hard look. Talk to their professionals. Probably don't talk to your crazy uncle.
Yeah.
But really consider what the markets are going to do over the next year, and maybe a variable rate settles up some consumer debt, as well as allows you to you know, take advantage of the rates as they come down over the next 12 to 24 months.
Yeah. And then speaking on that, what do you think people are going to request the most from you right now in terms of like term or fixed versus variable? Like it felt like last year there was a lot more talk of shorter terms.
Absolutely.
And so, like, do you think that's going to continue? Do you think people are going to request more and more?
I do, and the banks are already ahead of it. I think that a lot of the banks, their 4 and their 5 year rates are pretty much on par. But if you want to talk about a 1 year, literally a 1 year fixed conventional mortgage is going to be neck and neck, if not more than a variable rate today.
Yeah.
So the banks are saying, like, if you want a 1 year, like, you know, you're going to pay for it.
Yeah.
And those are definitely strong conversations to say you need to take a variable, and here's why.
Yeah.
People, you get a little cute trying to play the market, like saying, okay, I want a 1 year and then I'm going to renew.
Yeah.
Well, I can run the math on that for that person and say, this is where the rate needs to be in 1 year for that to have made sense.
Yeah.
That's a fair request for anybody to make from their broker. Because right now, just to blindly say I want a 1 year, not knowing what you're betting on, is not an educated decision.
Yeah. There are quite a few people who do the 1 year to 1 year until rates get to where they like, and then do a 5, which is crazy to me.
With the yield curve, like, you will pay more for the shorter terms. Like it's the way it is. Our system really, and everybody loves the 5-year. It's been the way, the standard, term.
Yeah.
I don't know why.
Yeah.
Sometimes it's definitely a bit of a head scratcher.
Yeah.
But people like comfortability and things they're familiar with, and so no, lots of options to weigh out right now. Definitely it is not a one size fits all.
Yeah.
And I hope we're right, and I hope our my conservative bets are proven wrong, and we can look back in a year and see a rate that starts with a 3.
That'd be amazing.
That would be
3.99.
Yeah.
All right, check back in a year, and we'll see who was right, or how far off we are.
And by this point, the 49ers would have won the Super Bowl.
That's your other prediction. All right, thanks for watching. Like, follow, all that stuff. See you next time.
See ya.